Hey traders, Raghee here, and in this simpler futures free video, I'm going to walk you through some of the setups that we have in play right now, and then in the premium video, I'm going to talk about some of the management and some of the setups that are on the horizon. But there are some really interesting moves that are happening, and they're mostly trend follows because that's what I like to do. And we're going to start off with the crude oil market. So crude wandered up into this zone that I felt would be an exhaustion zone up against the 50 major psychological level. And that means that those resistance levels in front of 50 are a sellable overbought zone. And what does that even mean? I'm waiting for the market to correct, and I'm waiting for it to correct to a very specific spot. So think about this for a second. You know, most traders, if you told them as the markets are down at 46 that I want to sell it up at 49.50, you know, when it's $3 plus away, you know, believe me, I see the looks I get, and people think, oh, you're crazy. This market's going to 30. You know, the market's not going to bounce that high. And then all of a sudden, I get this magical little wick that takes me to 49.66, and I get a $3.50 price improvement from anybody playing a momentum short down here at 46. Now, I'm not trying to rub salt in a wound on anybody, but what I'm trying to say is, hey, I have the same opinion as any seller, but I want to pick my spots. I want there to be the best RR, and I'm terrible at drawing with this trackball that I use. There we go. I want there to be an awesome RR from whatever price level it is that I get, okay? I'll have to take some classes to get better at that. Okay, so ultimately, what it is that I'm focused on is the corrective buy, the exhaustive buy, selling into a bounce. But the bounce is, that terminology is pretty subjective. How do I determine what that is? It's going to be predicated on two things. One, a price level that I already have in mind, like 50. One, a zone that I already have visually mapped out, like my 34 EMA wave zone. And then also there's a narrative. When the market rallies on this proposal of extending the production cuts for non-OPEC and OPEC producers, mostly Russia and Saudis, two of the biggest non-OPEC and OPEC producers respectively, when they want to go ahead and extend the production cuts, the chatter is that that's what they want to do. It's just a proposal. That's a pretty fadeable move after the market's already rallied for the better part of, oh, I don't know, 7 candles at that point. Okay, so it leads me into my zone. It's a news story that is likely to be faded. In other words, that strength is to be sold into, and this is actually working out really well for us. A couple of things that keep me pretty positive about the overall downtrend. You know, when you trade currencies and futures, you get a tremendous insight into what's happening in the ETFs and in stocks and certain stocks names. And I also believe that when the OIH hasn't even thought about reversing course, other than maybe a little bit of a stall here, which was easy to sell into, this would be a distribution, that should be a D, a distribution fade short sell. I don't know why. Usually I'm so much better at drawing with this. It looks like hieroglyphics. But that's going to be a distribution fade short sell. So if I can get that kind of move here, a distribution fade short sell, and I don't believe that the market has reversed course, right? I don't believe that's what's happening. I believe this is just a continuation, right? When I see that, I am very much a crude oil bear as well when the OIH is bearish. Not that the tail is going to wag the dog, but it's great confirmation. Okay, so this allows me to play not only CL, but OIH, or use OIH as insight into what CL may persist on doing. That makes me pretty confident about that crude oil short. All right, what else is going on? I think we saw a quick little pop in a number of commodities, and a lot of times that's going to happen when we get US dollar weakness. Now, this US dollar weakness was actually triggered by a lot of euro strength. So I don't want you drawing a straight line from the euro to commodities, but the relationship is if the euro is strong, it's going to weaken the US dollar, and that US dollar weakness could help certain commodities have a quick rally, have a quick pop. Okay, and you'll see that in things like the OIH and crude, and you'll also see that in things like gold, and you can go back to not just things like GDH or GDHJ or Nugget, stories like that, but you can take this back into stories like the like PIC, which is pretty illiquid actually. And you can take this into stories like the larger name here in the minings and metals, XME, XME. And again, I like the fact that I'm overall a bear, a seller. I want to be a seller in gold. And when this is still heading lower, that makes me a whole lot more confident about what's to come here. Now, I know if this persists, if gold persists on rallying, that could start to rally PIC and XME. But I am much more positioned and ready to be a seller in gold, and that XME is going to be something I can do in tandem or use as confirmation. All right, next up, let's talk a little bit about what's happening in the Dow. This is now the third time that the Dow has given us the 20,995 short sell. It's the third time now. We've taken this twice before, so 3 times here. And what we're looking at is taking this 20,995 down to, I'm sorry, 20,995 down to 20,855, and then 805, and then possibly, the number I've been holding out for was 755, but I will actually change that to 765. Okay, 765. And the thing to remember about the exhaustion here, I am not overall an equities seller or a bear. I'm actually very bullish on equities. But for as long as 20,117 holds as resistance, I am fine with shorting up into 20,995 with a stop at 21,125. It's not a lot to risk for a daily time frame. And it's now worked out twice. I'm looking for this move to take us down again to 855, 805, and then 765. Okay? So ultimately, again, if we bust up through 21,000, that is a trade that I would like to take. And in the premium video, I'm going to show you how we can do that, how we can actually understand when 21,000 is going to be broken, and how to position ourselves in that trade with some intraday time frames. I'll catch you in the next update.